Happy Easter! This is Brian Shannon from Alpha Trends Blogspot. Today is Sunday, the 8th of April, 2007, and we're going to try and figure out a way to make some money on Monday. Let's take a look first at shares of Akorn Incorporated, symbol AKRX. You can see here on the screen, it's actually a pretty thinly traded stock, so you might want to be careful with this one. Look at the average daily volume over the last 20 days has only been 367,000 shares. But you can see we had a real big surge in volume in here just about 2 weeks ago, and the stock broke out past some resistance at this $6.50 level, and it's been holding really well above there. In fact, it found some support just at about that 6.5 level as we saw the 10-day moving average catch up to price as well. Now we've got the 10-day moving average above the 20-day moving average, which is above the 50-day moving average, and all of those are heading higher. So telling us the short-term, intermediate, and longer-term trends are higher in the daily time frame. And on the weekly time frame, we see the same thing here, is a stock at multiple year highs. Going back to a monthly time frame, we can see that it looks like this stock is at indeed all-time highs. So the way I'd like to play this stock is to buy it above $6.65 a share, which would occur right around here. So basically above this level right here. Above $6.65 is where I'd like to purchase this stock. I think you set your stop at about $6.48. And then we could look for a target up near about $7.50 a share in this one. So that'd be about 17 cents of risk with the opportunity to make, it looks like, about 85 cents in profitability. Next, we're going to look at shares of Alexza Pharmaceuticals. ALXA is the symbol for this one. And you can see that this stock had some kind of FDA news or something like that, most likely. I didn't bother to check. But it did break out to, well, at least yearly highs. And looking here, like it broke out to all-time highs. So it broke out to all-time highs on this huge surge in volume. And the stock has subsequently pulled back on diminishing volume. And right now we can see that we've got a rising 10, 20, and 50-day moving average. And it looks like the stock might be ready to move higher again. Now, I'm going to warn you, this is a very volatile stock. And even though this day we saw over 10 million shares trade, the volume can get pretty thin. Look at this 5-minute chart from last week here. And you'll see on Friday it traded very light volume. So if you're not really what you consider a good trader or a very skillful trader, stay away from this one. And that might sound like an insult, but it's not meant as one. It's meant to say that the danger is high in this stock because of the lack of volume at certain times. But when people get excited about this stock, it looks like the volume's coming in on the upside. So I think that the stock has a good chance of continuing higher. And basically, I think that a good way to play this stock would be to do it on strength above $12.30 a share. When you're in this stock, I think you set your initial stop just under 12 bucks a share, so about $11.98. That gives us about 32 cents of risk. And I think that as soon as it gets up to about $12.50 a share, though, you want to raise that stop very quickly right up to break even. So if you get in above $12.30 and it gets up 20 cents or so, don't give it the opportunity to turn into a loss. So that 32-cent risk, once you have 20 cents of profitability, that 32 cents of risk in your mind should be gone. It becomes a break-even trade. And be careful to adhere to that because, like I said, it's a volatile stock. Now, we've got this declining 5-day moving average, but the stock has tested that moving average a couple times here. And just a couple hours more of sideways action will turn that 5-day moving average sideways as well. And we can get that to turn higher again, I believe, once it does take out this little resistance at $12.30. As far as a target, I think minimal upside target is right around here at $13.25. But I think that there's a potential for an even bigger move, which is up to the VWAP. The VWAP meaning the volume-weighted average price since that gap occurred. Now, what I'm going to do is take this pencil and take it and draw it straight across. And you can see up above there's a line starting to be drawn up at about $15 a share. As I drag this pencil across, what's happening is that price is that line is dropping just slightly because it's taking the average price at the amount of volume traded at price since this gap higher at this point. So it's telling me that the average price the stock has traded hands at is about $14.60 a share. Now that's not the official upside target, but that's where there's, I think, a good chance of finding resistance if the stock is able to make it past our first target of $13.25. So just to wrap it up, it's kind of, we're looking to buy it above $12.30 a share. Put that stop at $11.98, gives us 32 cents of risk. But as soon as it rallies 20 cents, raise that stop to break even. And then we'd be looking for a minimum of $13.25 a share on the upside, or about 95 cents of potential profitability. Now here's a stock that isn't quite as funky as those last two ones. This is called PDL BioPharma, and this is symbol PDLI. This stock, classic, just up on big volume. We've got a rising 10, 20, and 50-day moving average, and a low volume consolidation as the stock has kind of been waiting again, like the other stock, for that rising 10-day moving average to catch up to it. So I think we can buy this stock above $21.85 a share. Let me just get this pencil back. But above $21.85 a share looks to be a good place to buy this stock. That's where I think that the buyers take control, getting it past these highs of the last 2.5 days or so. Once in it, I think you set your stop at about $21.63. That would give us a risk of 22 cents. And a reasonable upside target in my mind is right up here at about $23 a share. So that would give us a target that's $1.15 away, with just 22 cents of risk. Makes for a nice risk-reward ratio. One short sale candidate, and that is American Express, symbol AXP. Looking at the weekly time frame, you can see it's struggling with the 200-day moving average. The daily time frame, I think it's probably going to turn around one of these days. But I think we've got the opportunity for one more little panic move lower. And, you know, the market is in an uptrend, so take that with a grain of salt. I'm just putting this on here just in case we get real market weakness. And basically, I think you sell this stock short below 55.80. The shorts aren't really high probability trades right now. But below 55.80 would tell me there's probably a bigger problem with the market. And that's where I think we ought to get short this stock. Even you could look at it and say, well, shouldn't it break 55.75? I think that's where most people would look to get it short. So I want to be a little bit ahead of them. But if we could sell it short below 55.80 and then put our stop just above Friday afternoon's high and near that 5-day moving average at 56.05, that only gives us 20 cents of risk. And I think the potential for downside opportunity is about 54.5. So that would give us $1.30 of potential opportunity for a risk of just 25 cents in shares of AXP.